Good morning, good people. It's your man, Investing with Cam. I just want to come on here this morning and talk to you guys about three different ETFs because if anyone's been watching my channel, you'll see where lately I've been posting a lot of videos about AIPI because personally I like AIPI. I feel that it is going to be a stable ETF, even though it hadn't been around for a year just yet. But like I said, I really do believe in AIPI and that it will be able to continue to pay out a high dividend as well, or distribution. The distribution may not be as high as 35% in the long run, but I still do believe that they'll be able to at least pay out $1 per share every month in the future, at the least, I should say. But like I said, I want to talk to you guys about three different ETFs. I'm going to start with, like I said, my favorite, which is AIPI. And what I want to show you guys here is that, for starters, AIPI is down in the long run. Max time AIPI is down, as you can see here, almost 20%. And or $9.73 max time or all time. But if we look here, AIPI on its inception date or listed date, it started at $50.48. And like a lot of stocks, not all, or ETFs as well, they'll shoot up over the first month or so and then eventually go back down. So it's been as high as, let's just say, $55.82. But from there on, as you can see, it's been down. But what I want to show you guys as well, because a lot of people are saying that it's NAV decay or NAV erosion that's going on with AIPI, and I beg to differ. And I say that because if we look here, earlier this year in February, AIPI was pretty much back up and over the inception day price. It didn't reach its all-time high, but as far as the listed price, it had gone back up to that point in which it had pretty much broke even, so to speak, on price, or what have you. And then, as we all know, the market started to go down because of all the tariff news and the things that are going on pertaining to the government. And so that kind of pretty much brings us to where we are today, which is that $40.75 per share. But like I said, I just truly don't believe that it's NAV erosion. It's the market that caused this ETF to go back down. Because like I said, once the market starts to go back up, AIPI is going to go back up as well, and more than likely be able to reach all-time highs in the future and surpass those all-time highs. And it is speculative speaking that I'm doing, but it's something that I truly believe is going to happen with AIPI. But this video is for others and the ones that don't truly trust in the high yield that AIPI has, and as well as the overall inner workings of AIPI. And they want something that is a little more stable, in which we all want that. I want that as well. And so what I want to show you guys are two ETFs which I have been looking into. One is NEOS S&P 500 High Income ETF, which is an extremely stable ETF in the long run. It doesn't go up a lot. It doesn't go down a lot either. And so if we look here as far as max time, it's only down about, let's just say, 4%. Or $1.84, which is better than what AIPI is doing, or has done, I should say. If we look here on its inception date or listed date, it listed at $49.90, and right now it's at $48.06. But like I said, it's one of those ETFs that don't go up a lot. I mean, its highs is probably, let's see here, about $52 and some change as far as its highs. And then it does have some lows that were at about $45 and some change. But overall, it's a pretty steady and reliable ETF as well. And I'm going to get into the distributions that these ETFs have had since their inception date or whatever have you. Let's go over to my third one, which is JEPQ, which is JP Morgan's Exchange Traded Fund ETF. And this one is more so like AIPI in a sense, as far as it's more geared towards the technology side of things. And as we can see here with JEPQ, it's actually up max time. It came into the market or listed at $50.10, and right now it's at $51.43. But once again, it's had its highs and its lows. I mean, it's been as low as how AIPI is right now, you know, $40 and some change. But as you can see, it regained those losses, and at this point now is up all over time, or all time in a sense right now. But like I say, all these ETFs, they're going to have their ups and downs just like stocks do. You just have to invest your money in them, trust in the process, and know that they're going to eventually recapture those losses, and as well continue to pay out the distributions that they pay out. But these are the three ETFs that I want to talk to you guys about, and I want to go into a little bit more detail on these ETFs as well. So let's just start here with JEPQ. JEPQ, we're just going to say in the past year, it paid out $5.93 per share, which is decent. It's a dividend yield of 11.53%. And so you're going to have to invest a little bit more money into JEPQ in order to make as much of as a distribution as what an AIPI pays out. But $5.93 per share is pretty strong considering stocks and other ETFs as far as what they pay out per year. Let's go now back to that screen and let's check out SPYI, which SPYI paid out a little bit more in distributions last year compared to JEPQ. It paid out a dividend yield of 12.78% and paid out a distribution of $6.14 per share last year, which is a little bit more than JEPQ. But like I say, in order to really make that money that you would with AIPI, you're going to have to, in a sense, double the amount of money invested into SPYI or JEPQ. Now let's go over to my favorite, which is AIPI. And so with AIPI, with this dividend yield of 34.4%, you know, which in a lot of people's minds just sounds extremely high, and which it is. And it paid out $14.07 per share in the past year, which is pretty much double SPYI and almost triple what JEPQ has paid out in a sense. But like I said, a lot of people don't trust that 34.4% dividend yield, in which in some respects I understand that, because it is extremely high, but it has been consistent for almost an entire year. And so why wouldn't we trust it? When it had its downs, it went back up, you know, and it has gone back down at this point, but it is slowly trying to climb back up. And so once the market, and if the market starts to do well again, AIPI is most definitely going to do the same. This is not financial advice. I'm not trying to persuade people to invest in any of these ETFs, but I just want to show you guys what our options are out here, and that we don't have to settle for investing in like a Coca-Cola and having to have $1 million invested just to make somewhat of some income in order to be able to offset our bills and our daily lives, or cost of our daily lives. You know, with these ETFs, especially AIPI, if you invest 100 grand in the AIPI, you're going to make almost the same amount of money in distributions that you would make with $1 million invested in, like I say, a Coca-Cola. And so just think about that. And you know, a JEPQ or a SPYI, it may take 200 grand or 250,000 in order to make that kind of money, but it still is a lot less invested considering what it takes when investing in your I would say your normal everyday stocks that are out there and that's been out there for a long time. But I just want to go over that little information with you guys because, like I said, there are other ETFs out there that are slightly more stable in a sense than what AIPI has been and what AIPI is. But is it though? Because I say that, once again, because if we look at JEPQ had gone all the way down to $40 and some change at one point, $40.65. And so it was down almost 19%. And this has been pretty much over 2 years ago when this occurred. But I'm just saying this because this is where we're at right now with AIPI. And at the same time, AIPI as well pays out quite a bit higher dividend or has a higher dividend yield than what a JEPQ has. And like I say, in my mind and from the numbers that I have looked at and the things that I've gone over personally with AIPI, it is just as stable as a JEPQ. Don't get me wrong, its lows were down to about $35, but as we can see, with the market starting to increase, it has gone up to $40.75 again. And so what makes you think that it won't go up another $5 and some change here really soon, and then another $5 and be back at that $50 mark? And so I personally think that right now is a great time to buy into AIPI if you are able to, and just hold on to your investment. Because like I say, even if that dividend yield drops down to 25% or even 20%, that still is a lot higher than just about all of the other stable ETFs that are out there, and as well as a lot higher than any stock that is out there. And I say stable because you have your yield maxes and some of these other companies that pay out outrageously high distributions of 100%, 150%. And I know that that is truly something that's not going to be sustainable in the future. And this 34% distribution yield or dividend yield that AIPI has may not be sustainable for the long run, but 20% is most definitely obtainable. I feel even 25% is obtainable, especially just based off of what they have been able to do pretty much over this whole year that AIPI has been on the market. But like I said, this is not financial advice whatsoever. I always say, or I will say, do your own investigation on any stock or ETF that you're going to invest in, and don't just invest in it because of the hype, because a lot of people got caught up in the hype of the yield max ETFs. And I thank God that I didn't get caught up in it, because there was a point in time where I was thinking about investing a lot of money into those ETFs, and I didn't do it, thankfully, because at this point I would have lost just about all of my investment money, even though that distribution that it was paying out or has been paying out may have countered the loss in a sense. But overall, I still would have been down, because if you invest 50 grand, let's say, in the Coney when it was at $20, and now Coney is at $18, at $8. It's actually less than $8. But imagine what your 50 grand would look like today. You see what I'm saying? So we're talking about over half of your money lost. You probably have 20 grand out of 50 grand that you invested when Coney was at $20, or even higher than that. A lot of people invested. You had a lot of people whose accounts have been liquidated because of yield max. And I don't want to bash that company, but at the same time, if you are able to get out of those investments, especially if you have quite a bit invested, I believe that it's time to get out and invest in something more stable. And I'm even kind of caught up in the dividend yield hoopla, so to speak, just because of AIPI and what it pays out, and I would rather invest in AIPI than invest in JEPQ or SPYI because of the distribution that it pays out. So, like I say, it's easy to get caught up in that yield because I am, in a sense. But I just thank God I was smart enough or had the walls put up to not invest in yield max. I do own like 120 shares of Coney, but my purchase price is like $9. So I didn't purchase them when they were at their all-time highs. But I refuse to invest any more into them, and I might even sell those few shares that I have and put it in the AIPI. But at the same time, with those 120 shares, I do, get the monthly distribution. Like this past month, or this month, I should say, a couple of days ago, I got paid out $78, which is decent, and I took that $78, took some of it, and I purchased another share, if I'm not mistaken, of AIPI. Let me just double check here with my memory. So yeah, I purchased a share of AIPI on the 2nd of this month. But I've just been slowly building up my shares in AIPI because at one point I wanted 250 shares, but I truly believe that with 500 shares, I could stop investing in the AIPI and just let the snowball effect do its thing and slowly build up enough distributions coming from AIPI to be able to do other things with those distributions. Because right now, that little $50 that I get is not enough to do much of anything. Maybe a tank of gas or out to eat or something like that, which is pretty cool. But I am trying to build up enough income to where I can slowly work my way out of the rat race, you understand, and not have to punch the clock and be able to do other things that I would rather be doing, in opposed to having to spend my time working for someone else and making another company rich while they only pay me pennies on the dollar. But that's just my 2 cents on AIPI and the other ETFs that I discussed here this morning. And like I said, just do your homework and do your research. And there are others out there that may pay a little bit less, may pay a little bit more. But I feel like the 3 that I discussed are extremely stable and reliable to the point where if you are in retirement or are planning on retiring soon, you will have a strong idea of what type of money you will receive every month from your distributions, because they don't vary as much. But once again, they all do vary. The only one that truly has the most stable distribution amount is actually going to be SPYI. SPYI has paid out roughly about 50 cents, 48 to 50 cents, I would say, every month. It hasn't varied as much as AIPI has, because we know that AIPI has paid out as much as $1.45, and just recently paid out $1.10, which is a 35 cents difference, in opposed to only 3 cents difference. And even with JEPQ, it has a little bit more of a variation in its distribution amounts as well, compared to what SPYI has. So I would say out of the 3, in all honesty, SPYI may be the most stable out of the 3, based off of its distribution amounts, and as well based off of its share price. As far as the ups and downs of the share price, it's probably the most stable. So if you have more money than what I do and are able to invest a little bit more in the SPYI, then that may actually be the better investment of the 3. But like I said, I'm an AIPI guy for right now. Maybe one day I'll hit it big and I'll be able to put 200 or 300 grand in the SPYI. And then at that point, I'll have something that's a lot more stable, and as well as I'll be able to make the kind of money that I would like to have in order to live freely. But y'all take it easy out there. It's your man Investing with Cam. And I hope y'all have a great weekend or rest of your weekend, and have a great week ahead, and keep investing, and let's make some money together. Talk to you soon.